Okay, here we go. 2023 update. 7.6% operating margin. So that's probably going to
66
be
cents non-GAAP. That's the bottom number. Not good.
66 cents non-GAAP. Okay. Yeah, that's
Yeah.
definitely low. Cash flow of 0.8 billion, 3 billion increase in our cash investments quarter over quarter, 4 gigawatt hour energy storage deployed in Q3. Okay, let's go ahead and go to the sheet here. So actually, car gap margins are down quarter over quarter sequentially from 18.2% to 17.9%. Operating margin is down to 7.6%. Let's see. Energy storage only grew by 50 million quarter over quarter. Adjusted EBITDA is down to 16.1%. Yeah, so gap diluted is 0.53, which is so versus my 0.68. That's a pretty significant miss to the downturn. We're not even going to compare it to James's number. Let's see. Let me go down to which page do you guys like to watch?
Dr. Pepper to vodka. I'll be right back.
Usually I like to start with this page first, the actual P&L. I don't know if you guys want to look at something else, but let's see.
Stock's kind of creeping back up after hours, back to where it closed at. So maybe the reversal happened. Yeah.
Well, what
R&D
is
is up
actually
about
is the big miss? Like 17.9% auto gross margin. It's not terrible. I think that's good.
That's
Now
actually
stock
better
is
than I
up
thought.
from where it closed at.
So what
It's in the
exactly is
green
the big
now.
miss, guys? What do you guys think? I didn't catch that.
I'm still reading.
I just think there was so much negative
Yeah,
sentiment going into this.
the credits were 550 million. So if you kind of back those out, I mean, that's actually, I think the core business probably looks a little bit worse. Energy definitely not super strong the way that I was projecting. I mean, essentially flat and not a huge kind of margin. Actually, the margin improvement looks like it was reasonably strong on the energy side. But yeah, I don't know. I need to dive in a little bit more to figure out exactly what accounted for the kind of miss. But I mean, it seems like it was relatively close to what Wall Street was expecting, but even Wall Street was a little bit high, which is extremely unusual.
So cash is up 3 billion to 26 billion now.
It's awesome. That's amazing.
So that's
Amazing.
which is interesting when they're we're gonna have to dig a little bit deeper in that. Let me go ahead and read through some of the slides and see what we see there, and then y'all jump in as you need. For those jumping on, thank you so much for joining us. I'm trying to make this as big as I could possibly make it for all of us to read through it. So I'm going to go ahead and read the summary from the company. Our main objectives remain unchanged in Q3, reducing cost per vehicle, free cash flow generation while maximizing delivery volumes, and continued investments in AI. Our cost of goods sold per vehicle decreased to 37,005, while production costs at our new factories remain higher than our established factories. We have implemented necessary upgrades in Q3 to enable further unit cost reductions for Q4 and beyond, I'm guessing. We continue to believe that an industry leader needs to be cost leader. During interesting statement there. During a high interest rate environment, we believe focusing on investments in R&D and capital expenditures for future growth while maintaining positive free cash flow is the right approach. Year to date, our free cash flow reached 2.3 billion, while our cash and investments position continued to improve. We have more than doubled the size of our AI training compute to accommodate for our growing data set, as well as our Optimus robot project. Our humanoid robot is currently being trained for simple tasks through AI rather than hard-coded software, and its hardware is being further upgraded. Lastly, with combined gross profit generation of over 0.5 billion in Q3, our energy generation and storage business and services and other business have become meaningful contributors to our profitability. So that's the first time I've seen the Optimus bot being called out on the summary page, if I remember correctly. And it's also the first time that I've heard Tesla mentioning that energy is going to be a significant contributor to the business.
I
So
just
it
don't
looks
like the
they're-
way they said Optimus's hardware is being further upgraded. Does that mean that it's not ready for scalability yet, or maybe it's just a turn of phrase, right?
That's not a surprise to me at all. Like zero.
Yeah, it's
surprise
early.
there.
Yeah, and I think that's a big reference to all the actual actuators that they're using and trying to build in-house.
Just looking through the page here. As you guys are reading through, let us know if you're finding something in the comment section. I'll look to bring it up as well. Yeah. It takes a few minutes to digest this properly as we're going through it live. So apologize for the dead space, but
The
I mean,
current
free
installed
cash flow falling significantly, and everybody's been warning about that, right? But the cash that they generate, 3 billion when they're investing 2 billion into supercomputers and more, that's incredible.
So help me understand how their cash reserves grew 3 billion, but free cash flow is down. Does somebody have their head wrapped around this in the report at all? Yet or no? Oh, here's another one. Days of supply for the vehicles is flat. So it looks like so it was raising from 8 to 13 to 15 to 16, and now we ended Q3 at 16. Global vehicle inventory days of supply. So it looks like we've kind of hit like a little bit of a hump. For those that were concerned about growing inventories, looks like it's been relatively flat this year, between 15 and 16.
Farzad, what was your free cash flow question? Because I'm not sure I'm seeing the same thing as you.
Oh, so are you seeing free cash flow up for the quarter?
No, not up, but I mean relatively flat. If you look on what is it, page 24, it's got the
Right
quarterly
here.
free cash flow, and so it's 848
3.3.
million.
Oh, sorry.
Yeah, I think the part
what
that you're
page?
referencing,
24?
Farzad, was from the summary. It said they had a quarter-over-quarter increase in cash and cash equivalents of 3, and so that you see that they're on the bottom line going from 23 to 26.
23 to 26. I saw it. Hold on. I saw it on this on the balance sheet here. So this is where I saw this. It went from 23 to 26. So that's the
Well,
largest jump in cash that I've seen.
Yeah, that's different than free cash flow. I mean, that's like the balance, and that includes investments. So their operating cash flow was 3 something billion, I think, and their capex was around 2.4. So they had a pretty significant increase in both operating cash flow, and then the capex did not increase maybe quite as drastically.
So
then they had proceeds from maturities of investments. That's the piece that maybe you're missing. So 3.8 billion of their short-term investments came due this quarter, and then they essentially reinvested a little bit more than that. But one other quick thing I noticed as I was looking through some of the numbers. So on the energy side of the business, like the top line growth again was not super exciting. So I think that kind of trend of deferred revenue that I was explaining before the stream, or in the earliest part of the stream, didn't happen. It went from 1.5 to 1.55 billion, not a huge uptick, but their gross margin actually increased to 24.4%. So they actually had $380 million of gross margin on the energy side of the business, which is, I think, still a lot higher than analysts were expecting on, frankly, a really low base of top line revenue. So whenever the top line energy revenue starts to really kick off, I mean, Elon was talking about hitting a 25% gross margin by the end of this year, and he was saying that was kind of like an aspirational goal. They're already there now, essentially. So to me, I'm super bullish about this energy story. The timing of when more revenue will be recognized, it's delayed a little bit longer, it looks like, but it's still going to be there eventually. And the margin story is just phenomenal.
So what Matt's talking about here, so if you look at the energy storage, generation of storage line right here for revenue, it's up only 50 million quarter over quarter, and it's kind of flat for the year. But then if you look at the cost, you can see it went from 1.3 billion to 1.2 billion to 1.1 billion. So it looks like they're getting more efficient. Let me ask you this: does the IRA battery credit fall in that line, or where is that accrued?
Well, probably, but it's relatively small credit, and so I'm not an expert on this, and frankly, I think Tesla may have a little bit of discretion around exactly how that's treated. But my understanding is that it does flow there, but they are not making their own cells for megapacks for the most part. So they would essentially only be getting the $10 per kilowatt hour, kind of pack credit, as opposed to the $39 per kilowatt hour credit. So that alone is a pretty small. I mean, when you think about $10 on a per kilowatt hour on a cost structure of, say, I don't know, $250 per kilowatt hour, it's just relatively small potato. So I think the story, I think, is more of their megapacks are coming from Lathrop. They're the Megapack 2 XL. Whereas, this time last year, they were all being made in Giga Nevada, and it was just a much less efficient production process.
Hey, Farzad, I think we should go to the page 10, which is the outlook. There's some really good statements there that I think are pretty well the most important things. talk about.
Uh,
So number
No,
one,
accounting. Accounting's the most important thing.
no,
Yeah.
it's not.
And-
I'm about outlook. Take a look at the outlook, buddy. I mean, it's awesome, right? So take a look at this. First of all, they say that they're still on track for the 50% CAGR target. That is a big statement, I believe. And then down below, they go Cybertruck deliveries remain on track for later this year. That's a big statement.
Alexandra, hello.
How are you? How are
We
you?
finally
Can you
have
hear
some
me?
beauty on this board. Geez, about time.
You
My
got
God.
James. James did his hair better than me today. How
What
y'all
are
doing?
your thoughts?
Not
Good,
too
good, good.
depressed? Oh, you're good. Huh?
Yeah.
Okay, if you're all good,
We're
then
used to the
I'm
pain.
good. Then I'm good. I
I'm
mean,
dead.
exactly, right? We're used to the pain this year. That is exactly it. So what's been your findings so far so that I don't double on stuff you've already said?
We're still processing a lot of this information. There was so one of the things that we found was energy, that margins are improving, which is good. We were just looking at the outlook on how they're calling out Cybertruck being on track. I think what was the other thing? The 3 billion increase in cash was another one that we saw. But a
I think,
reduction in gross margin
auto
in
gross
cars.
margin at 17.9%, and yet the
Is good.
cost of goods is improved is very good. I think that's a signal that the cost is now controlled and maybe less price reductions in the future.
Yeah.
Them reiterating the 50% CAGR target, them reiterating Cybertruck going to be hit by the end of this year. We're good. That's
Yeah.
the most
Can
important
I-
thing. Outlook.
Can I push back on that? Can I push back on that real quick? I'm
Sure.
confused
No.
because. Oh, okay. I'll just go back into the coffin. So
I love your look, Nick.
thank you. About time I get some compliments around here.
You're not gonna
The
get
outlook
compliments from
says-
this crew, bro.
The outlook says 50% year over year, right? However,
Yes.
if you go to page 7,
Wait,
it
wait.
says
Nick, just
Yes.
sorry, but look, it says we expect to remain ahead
I know,
of the
I know,
long-term
I know.
50% CAGR with around 1.8 million vehicles for the year. That's
Yeah.
fantastic wording.
Let me just get to my point though. If you go to page 7, it starts off with California and Texas, and they say we are expecting the Model Y production rate in Texas to grow very gradually from its current levels. If you look at Shanghai, China, it says we are running near full capacity for several quarters, and we do not expect a meaningful increase in weekly production run rate. And then for Europe, it says similar to Texas, further production ramp in Model Y will be gradual. So what does that mean for 2024? Like that's you see what I'm saying?
It's not overly enthusiastic, that's for sure.
Yeah, it seems like they are going to be governing the production rate.
Let's get your thoughts, Alexandra. Were you able to process the deck? Where's your head at?
Not the whole deck, but I thought I'd jump on here because I was like, probably these guys are depressed, but I don't think you're that depressed. So what I found encouraging was that there is still free cash flow of nearly $1 billion this quarter, right? I mean, we had this discussion over the last couple of weeks, stock buybacks and all that. Forget about all that. But in the last earnings call, Elon had clearly said it's actually astonishing that given our rate of cutting prices and at the same time expanding in so many new product lines, that we still have free cash flow, and we still have free cash flow, right, of about 800 million this quarter. So that was on the good side. Obviously, the 17.9 was a little bit higher than expected. The operating margin of 7.6 gave me a stomach hit because we were at 9.6 last quarter, if I recall it right. So that is, 2% in operating margin lower is not encouraging. It's not something I had expected, especially since the car margin is there. So where did it go? Where did these 2% go? I guess there's a lot in research and development. So that's where I stopped searching and jumped in. So that was my first conclusions. Yeah, 9.6 we were last quarter of operating margin. So
and
there we are.
I think we touched on this earlier, but maybe we didn't underline it enough, but they doubled their compute capacity this quarter. That's insane.
Yeah, the
That's
dojo.
what I'm
that
saying.
is,
$2 billion. That's where it went. So it's okay that operating margin went down. What matters is auto gross margin flat,
Which is there.
and their cost, the cost of goods are stabilized. And so I think that that's what the story is.
But
It's like,
I-
price cuts going to still happen in future? Probably not. They're investing for the future.
But I do want to highlight though that auto gross margin is actually, if you remove the ZEV credits and the leases, it's down significantly.
Yeah.
It's down significantly. So
Yeah.
so the one thing I was expecting for this quarter to start realizing, even though COGS for the cars are good or are trending lower, we're still not seeing what I thought would be significant cost decreases from the COVID spike in the supply chain. So I'm still
True.
not seeing that. And I know we're ramping Berlin, I know we're ramping Austin and all that stuff. But in theory, as you get more and more cars cranked out of those factories, at some point you should see that to start to flow through. So is that being delayed to later quarters? Is that not going to be realized?
I think the big reason you didn't see that this quarter is because Shanghai was shut down for a significant portion of time, and that is your by far your lowest cost plant. So as that percentage of your overall pie of deliveries shrinks, like that's going to obviously create cost pressure. But for Q4, they should be running kind of full bore the entire quarter, and I think we'll see potentially some pretty meaningful cost increase or cost decreases in Q4 just because you've got the line running the whole time.